So Matt and Steve, thank you so much for joining me on today's episode where we're taking a look at real-time payments, particularly for business here. Now, Matt, I want to start off with you here because I understand that your organization recently conducted a survey around real-time payments and business payments. And I would really kind of like to start off today's conversation by possibly pulling out some of the highlights from that survey, because I think it'll help set the table for the rest of this discussion here.
Sure. So yeah, we did a survey of about 250 businesses regarding what they felt about real-time payments in the U.S. And there were some really good results in that in terms of what the businesses felt about choosing a bank based on if they offer real-time payments or not, or if they plan to offer real-time payments. That it was the second most important criteria when evaluating a banking partner, cited by 89% of the respondents. So you can see how critical companies are looking at real-time payments for their banks to be able to support them on a go-forward basis. Some of the other things that I thought were interesting in the survey were around what they thought real-time payments could do for them. And certainly the ability to manage cash flow more accurately and use it for general account payable activity and use it to try to take out check payments were some of the things that were considered most important by a lot of the respondents. So we thought that was really interesting information. And the final thing I would cite is that over 80%, 81% of the respondents expect real-time payments will transform the way payments are done in the United States, which I agree with.
So Matt, this is Steve. So I find that the one finding about the importance to the relationship, either now or in the future, of having real-time payments. I find that fascinating, simply because right now there's only about 42 banks that are connected to RTP, either directly or indirectly through a third-party service provider. So that suggests to me that the demand is out there and the supply is not out there. So it's got an interesting set of motivations there for other banks to get going.
I think that's right, Steve. I think it's a very good point. And I would also kind of add to that while there are so far still a relatively small number of banks that are connected, those banks represent a very large total, over 50% of the sort of checking account base in the United States. So everybody knows the U.S. banking landscape has a very large number of banks, thousands, right? But it's also true that the over 50% of the checking accounts are concentrated in a relatively small number of banks. So there's still, RTP has already established a pretty far reach in the U.S. given the banks that have signed up. And I think the next big objective and challenge for the network is to enable all of those smaller banks. And you don't necessarily have to go to each of those banks individually. A lot of those banks work through financial service providers. And if you can enable those providers, you can effectively enable all of those banks that use those providers. So that's the approach. And I think in terms of enablement, a lot of progress is going to get made through the rest of this year and into certainly 2021.
Yeah, and so just to kind of give a little bit of a background for our audience here in terms of just the scope of the survey. According to the announcement that was made the other day on August 20th, 2020, the survey sampled a range of businesses in different sectors with annual revenue from 1 million to 25 million. It was conducted in June of 2020. And then to look at more information about real-time payments, the nationwide survey was of 252 corporate decision makers. And so Matt, what I'd like to kind of get is, because I mean, I think that you kind of pulled out some great key highlights there. And I certainly find real-time payments to be very fascinating, especially with the Fed and FedNow. Obviously, we've had the clearinghouse, but now you've kind of got the Federal Reserve stepping in and saying, yeah, we need, the government needs to have their version of this. And I certainly see that as a nod to where the payments industry itself is going with that. But what I really found to be interesting was that in one of the responses, it said that only 77% agreed that digital will play a viable role in the future. And I kind of really have to ask the question of why not 100% there?
Right. Right. I think it's a fair observation, Ryan. Certainly, I feel that digital will be the predominant payment method. And, I would also say that, the situation that the country and the world has been through over the last 6 months with the COVID-19 pandemic and associated lockdowns and shutdowns and all of that, work from home, it has really exposed the fragility of paper-based payments, maybe in a way that we haven't seen since 9/11. And my view is that certainly consumers and also businesses have already been digitizing their payments, right? They've been trying to move to ACH. They've been trying to move payments to card, even AP payments beyond T&E and beyond purchasing, but AP to card as well. But there's still so much paper, right? And you get into a situation like COVID when people can't go into the office. How are we going to print these checks, stuff them in envelopes, meter them and get them out into the system? And then on the flip side, for the paper that we're receiving, all of our accounts receivable, so much of it's still going through checks. Maybe those checks are going to their office where they're using a remote deposit capture solution, or maybe the checks are going to their bank where they're using a lockbox solution. And all of that proved to be concerning. For the most part, the lockbox system in the US worked and was reliable, but there were concerns, especially related to data capture, and some of that is done overseas, and there were challenges. And if it were me and I were running a business and responsible for account receivable and account payable, I would want to get paper out, because it is a point of failure when people can't get into the office.
I would add also that there is an opportunity cost by not digitizing, because digital information allows you to take advantage of other types of advanced technologies that are starting to dot the landscape, like APIs and artificial intelligence, machine learning. So people forget about that, but you need digital data in order to optimize those other technologies.
Steve, that is a great point. And what we're seeing from our customers is there is a desire to not only digitize the payments themselves, but to digitize the payment processes to a much greater extent than we've done in the past with lockbox files and things like that. So the idea that we can help customers with invoice automation and with receivables automation to get further into their processes using AI, as Steve said, and help them automate those processes and achieve more straight-through processing so they can spend their time on more value-added business objectives is incredibly valuable. And RTP leans into that in a very strong way with the ISO-based messaging standards. So there is great value in being able to originate a payment 24/7, 365, and know that it's going to settle in seconds. There's great value in that. That is certainty of payment. But in addition to that, RTP has the ISO 20022 messaging standards that can allow for a much more common and consistent exchange of payment-related information that will allow companies to become more efficient in terms of, at a minimum, posting their receivables. So, Steve, could not agree more.
So I have another question. This gets back to sort of the enablement and ubiquity of RTP. And I haven't seen the detailed responses, but did you get any sense from your conversations and from the answers as to whether or not banks, for example, are holding off on implementing real-time payments because of FedNow, which is not going to be around for another 3 years?
Yeah, so my view on that is that customers, whether they're consumers or whether they're business, the people that run businesses, influenced by what they see in the consumer world, whether it's Zelle or Venmo, what have you, customers want payments to be faster. Customers want payments to make sense in a modern digital economy. And I think there is a solution in the market that is purpose-built, the first new payment rail in 40 plus years, that is purpose-built for the modern digital economy, that is available today and available to everybody. And I think if banks, think about what their customers want, whether it's their business customers or it's their consumers, they're going to realize that now's the time and maybe not waiting until 2023 or 2024.
Okay, yeah, I certainly think that's fair there, but I kind of have to. I want to take a look at the question in terms of what does that overall process look like? That's saying, hey, yeah, I want to implement RTP, but what does that entire process look like? Because as Steve pointed out, like, hey, look, we've got some adoption, but we don't have full ubiquity. So what does that process look like? Like, what are the hurdles that certain organizations are facing to be able to get to that point?
Yeah, so a couple of things. So first of all, banks and their corporate customers have a long history of implementing payment solutions together. So there's many ways to go about that, but essentially real-time payments is just another rail. It's just another option. So if you've implemented, a transmission-based relationship or a file, based relationship with a corporate client to make payments. So you're getting wire payment information, you're getting ACH payment information, you might be getting check payment information, right? And card, all of that. We do all that today. So real-time payments can be added to that. So Ryan, you're bringing up a good point and a legitimate point about the ubiquity issue, right? So what Citizens has done, the Citizens Treasury Solutions business has done, is we have built a smart router for our clients to be able to use, where they can send us in payment instructions. And we will use the router to determine if the payment can be executed via RTP or not, based on the receiving bank. And if it cannot be executed via RTP, we can switch it to ACH, and maybe it would go same day ACH, depending on the timing, and still be fast, just not real time. So those are things that banks that are on RTP and can originate RTP can do in the short term to help make it simpler for clients. What you don't want, obviously ubiquity is the end goal, right? Is the goal. But in the interim, we don't want our customers to have to figure out who can take it and who can't. We want to be able to help them do that.
So earlier this year, Matt, myself and a colleague, Sarah Grotta, had spoken to a bunch of the early adopter banks to try and get a sense of what that implementation challenge was. And what we got back was it wasn't so much of a technical challenge as it was a logistics challenge within the bank to get all of the different systems and departments to understand what a real-time environment was like and be prepared for that. So is that what you guys ran into?
Well, that was certainly part of the planning process, right? So, when you think about why real-time payments was necessary, it's because, Wire is sort of, pretty much real-time from Monday through Friday between the hours of 8 to 6. ACH is batch-based, even same-day ACH is batch-based and doesn't settle over the weekend, et cetera. So you had all these limitations. So, and because of that, commercial payment operations were structured in a certain way, right? So we did have to think about an environment from an operational and a tech perspective that was 24/7, 365. So, but that was all done in our project planning process to ensure when we went live, we were ready to support it. So for us, was it something we had to work through and deal with? Absolutely. But it wasn't a surprise when we launched the platform. It was something we had to account for. But Steve, you bring up a good point too, in that not only is it a change of process for the banks, it's a change of process for the corporates to introduce another new payment system into the mix. So that's something that they have to plan for. And maybe they use an ERP system that allows them to generate their ACH and their wire. Do they need to take a new release of that ERP system that might include RTP? So there's things that the corporates have to think about as well when they're ready to go on RTP.
And not to put you on the spot, but what was the most surprising thing that's happened since you implemented RTP?
The most surprising thing, I would have to think about that. I think the excitement around being on the early edge of a new payment system. I think in the last month or so, Citizens became the seventh bank to originate a legitimate consumer or customer-oriented payment that had a real business purpose. It wasn't a test transaction. It was a legitimate business purpose transaction, and that feels like a momentous occasion. So I think the way that the bank has rallied around this exciting new payment platform and the interest in it across our organization, from the various consumer businesses that have to settle with clients, et cetera, has been very, very strong. I think there's great opportunity to utilize RTP to help improve the client experience across many businesses within our bank. I think we're at the very tip of the iceberg in tackling those use cases. But I think there's a ton of opportunity.
So given the results of the survey and the suggestion that there is this very distinct demand out there right now, what types of business use cases have you guys seen so far?
Yeah, so there's a lot of interest in it, much like same day. The things that get gravitated that customers gravitate to first are the sort of just in time or emergency use cases. Did we miss funding a payroll file? Do we have to do some special one-off type of payment? Those types of things. We have definitely had conversations with our clients where them funding their clients is a critical part of their operation. For example, merchant acquiring, and how quickly can a merchant acquirer settle to their merchants has been an interesting use case. And really any sort of payment application where you want to push payments to consumer, whether it's payroll, insurance, et cetera. So those have been some of the the earliest use cases that we've been looking at, and in some cases are in the process of setting up.
Good, thanks.
Excellent. Well, thank you, Matt and Steve. Really appreciate the time taking a look at real-time payments for businesses, and I hope to have both of you back on to discuss this again soon.
Okay, take care. Thanks.
Thank you, Ryan. Appreciate it. Thanks, Steve.